When it comes to companies with large subscriber bases, everyone knows big names like Netflix and Amazon reign supreme. But quietly, a number of other subscription-based stocks have been surging. For more, let's go to the man we'd never cancel, Dom Chu, back in the newsroom. Hey, Dom.
Well, I hope that puts me right up there with the Amazon Prime or Netflix subscription, right, Melissa? I mean, but all kidding aside. Growing and relatively predictable streams of revenue are just things every company wants, and while we focus a lot on the Amazons and Netflixes of the world, a slate of other subscription-based stocks have been showing some interesting upside price action over the near and medium terms. We're going to call them the sign-me-up stocks. For example, take a look at satellite radio provider SiriusXM, which some folks might be using to listen to Fast Money as we speak. Those shares have taken a hit over the last few weeks, but over the last 3 months, they're still up around 10%. We're going to stick with the music thing. After debuting in early April in an unconventional public listing, streaming music company Spotify shares, they're up 21% around there in that last 3 months. Moving towards another media company, but on the news side of things, you've got the New York Times, up around 12% in that time frame as well. And we're going to finish off our sampler plate of subscription stock specials with a couple of lifestyle-oriented companies. You got online clothing stylist service Stitch Fix up around 35% in the last 3 months. One of the most impressive, though, price momentum stories for the last couple of years has been Weight Watchers, posting around a 58% gain during that span. Now, we're north of $100 a share now. Melissa, the same time 2 years ago, it was less than $12 a share. Back over to you guys.
All right, Dom, thank you. Also worth noting, our own Jim Cramer has been hot on the rise of these subscription stocks, the subscription economy, if you will, even calling it, quote, the best secular trends in the market. So we thought it'd be great to play, excuse me, I've been up for a long time, to play a little game we're calling Subscribe or Unsubscribe.
Okay.
Okay,
Do
that's
that.
more clear than some of the other games.
Yeah, I mean, this is...
Okay, good.
Yeah.
I understand that.
All right, so it's very simple. I always think the rules are very simple, but then they tend not to be simple at all.
They're simple,
You're the only
Mel.
one who went down.
They're simple.
We'll
Yeah,
go
some
around the
people are
horn.
overly simple.
On certain stocks, if the traders are buying, they'll say subscribe. Get it if you're buying, you subscribe. If you are not, if you're selling, unsubscribe.
Deny it.
Exactly.
Right.
So we're going to kick things off with the Weight Watchers.
Okay.
Tim, subscribe or unsubscribe?
By the way, you look great.
Thank you. All thanks to... I'm unsubscribing on this one. I think it's been a remarkable story. You've never bet against Oprah, and in fact, so hopefully you didn't. But this valuation, they're around 70 times. They've got major goals for the future. I think the balance sheet still has too much leverage on it, and I think that will thwart some of their growth, but it's been remarkable. Take your money and run. Great job, Oprah. I'm out.
I will say you have to subscribe, and here's why. The day that she stepped in there and bought her 10%, the stock was $7. I think when you look at this last quarter, and they had record numbers for subscribers, up 28% year over year. I mean, their numbers actually do justify where they are.
Wasn't it a strong quarter, a seasonally strong quarter?
Huge quarter.
Yeah.
And
But it also...
But when they pay for shakes,
quarter of last year.
Pete, I mean, at some point, the margins don't add up. I mean, you know,
Yeah,
a
but you
skinny
don't...
frappe
It is sticky.
and also, you look great, too, pal.
Thank you.
But, you know,
Thank you.
Their retention is unbelievable as well.
Nobody unsubscribes. It's so sticky because if they fail, it's your fault. If you do well on it, it's to the credit of Weight Watchers. So it's extremely sticky on the subs basis, and people just kind of keep it. It's almost like a Netflix. You never...
So it's worth 80 times sales or 70 times...
It's up 130%.
Exactly.
And I'm guilty of missing this one. I thought it was a sell real early, and this thing has defied everything for me. And I do believe that everyone that I've spoken to on a grassroots basis says that they love it. I would subscribe.
Earnings growth, rev growth, I mean, unbelievable.
Spotify's the next stock. Spotify, subscribe or unsubscribe? Karen.
Yes, uncharacteristically, for me, subscribe.
Really?
Well, I absolutely love the product and have loved it for a long time. And clearly the thing about these kinds of models for all of these businesses is, I mean, if you get a critical mass, every additional subscriber that you get, that margin is gigantic. So I think they have that critical mass, and it's a great product. The valuation is tough to swallow, but subscribe.
I'm a subscriber too. I have to tell you, I mean, and there's a lot of room in this gross margin right now to offset what I think are going to be contract royalties to artists that probably should go higher. But I think they figured out how to coexist with the music industry, and I think, frankly, they're rocking it.
But they're
Spotify.
losing money annually at an absolutely incredible rate. I mean, that bothers me. And I know what the stock looks like since the IPO. But I'll tell you what, it's going to absolutely cripple people, I think, because the competition's there, Apple's there. It's too difficult for them to survive.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.